Welcome to the Kendall Report. In tonight's report, I'm going to talk a bit about looking forward in the week as we come into some more significant numbers. GDP is going to be a big influence on the markets, but that's not happening until Thursday. In yesterday's action, there was absolutely nothing that was released that was likely to cause the rally that we saw, other than a little bit of FOMO and some anxiety. There was no economic reports out yesterday and nothing to really drive sentiment, but it was very strong to say the least. The S&P was up 1%, NASDAQ up 1.4%, Russell lagged again, up 0.5%. I continue to expect the metrics with the Russell lagging to continue for a while, as there's not really any leadership other than the large cap stocks, as I talked about in last week's video. But as we also look around, the 10-year was down to 1.608. No fear in the markets whatsoever. No inflation fear, nothing at all that reflects any type of fear of inflation or any overheating of any sort. So that is off the table as well. The dollar continues to sink. We're getting closer to some key trigger points. I won't cover that tonight. I believe there's plenty to talk about when it comes to the dollar, and I'll cover that when I have more time to discuss it. And we look forward to today. New home sales expected to show 975,000. I talked about this in last night's video. I think these home numbers are going to miss primarily due to the constraint of inventory. And I think that's going to show up as a factor. We'll see how that plays out today. And consumer confidence, that's expected to come in at 118.5 plus. That's going to continue to show a positive mode in the economy. We also have housing price index coming out and a Case-Shiller index, both pricing indexes. I expect to see them have a hotter than expected number, and this really isn't material for at least this point in time. We're continuing to see a slight positive rotation in our database, but nothing material. Let's go ahead and take a look at the charts and see how they're set up for Tuesday. As I begin with the WaveTech Database review, we did see some slight buying, 472 new buys, 156 sells. Not really material. Percent bullish is now at 53.94. We're still not getting any further traction on the sectors. Right now there's only 3 sectors of 12 that are long, so we're really not seeing that come into rotation yet. We're going to need to see the sectors get into +6, maybe as many as 8 sectors before we'll see material movement in the database to go to the next level to 62% to 68% from a bullish standpoint. As I begin with the review of the S&P futures, we are up 11.25 at 42.05. The market is continuing to see a fairly strong bid underlying. PPM1 is starting to accelerate at this time. We still need PPM2 and 3 to kick in, but it does look like it does appear that we're getting close to being able to accelerate to retest the all-time high at 42.38 on the futures. And this is likely to happen over the next couple days, but we'll need to see the PPM2 and 3 get through their second derivatives. Once that happens, it should be all clear skies. The critical level on the downside continues to be these moving averages at 41.61 level, also at the 10-period moving average 41.37. As we look at the market grid for today, we've traded just shy of R1, 42.0850, the high 42.05, low 41.95. So we're a long ways from getting to S1. I don't think we're going to get to an S1, but we're likely to see the potential of getting to R2 today, 42.25. As I look at the SPX, we came very close to getting an RTX sell yesterday, 4203.65. The high was 4209.52. We closed at 4197.05, so we closed just below that level. As we look at the market grid for today, the expectations would be for an R2 4218, possibility of going to R3 4229. The ATH, or the all-time high, is 4236.39. I think everything's setting up for a run toward that level at this time. critical levels as in the futures. The 21-period moving average 41.67, then the 10-period moving average 41.42. The PPMs are in the same position, so I'm looking for those to break their second derivatives on PPM 2 and 3, and we should be on our way to higher prices. Next market overview is the NASDAQ. NASDAQ had a very impressive day. We were able to get back above the 40-day and 21-day moving averages. I discussed those in yesterday's video. Since we closed above those levels, it now looks like we are likely to see a possibility of an R2 level, 13,791. Last week, I had expected that we would see a 13.9 number. We're looking now at R3 at 13,858, RXT is 13,927, and we're seeing some decent acceleration. The PPMs look almost identical to the S&P futures on a daily basis. Those suggest as well that a penetration of the second derivative on PPM2 will be the confirmation we should start to move up toward the all-time highs. This overall pattern is very strong, and as I mentioned in the opening comments, I do expect that the NASDAQ will be able to outperform the Russell as we go forward for at least the next couple weeks. The final market I'll cover is gold. Gold continues to drift sideways. I've talked about us being locked in this sideways trading range. The 10-period moving average is coming into play. Its PPM1 is at a plus 0.22, PPM2 plus 0.25, and PPM3 0.22. So we're in trend mode across the board. There's only about a 30% probability to trade down below the 10-period moving average at 1864. The low so far, 1875. Looking at the market grid for today, 1877 is S2. We printed 1875, and we've not quite printed an R1. So look for an S2 R1 for today, but I don't see any breakouts here, and I do not see the market declining below this 1864 level in this pattern. This will complete the video for tonight. Thanks for watching. We'll talk to you tomorrow night. Hi, my name is Bob Kendall. You know me from the Kendall Report. I help you manage your portfolios and protect your wealth. The way that I do that is through our software platform, Portfolio Expert. This platform is amazing. It covers over 16,400 symbols. You can build as many portfolios as you want to manage and to protect your wealth. What you'll find by setting up a trial of our software is that we're going to train and walk you through every step to become what we refer to as an ETF hacker. We're going to show you how to take your favorite ETF and make it something really special, and it's owned by you. We also call this building your own personal funds. And what that means is you're going to build your own personal mutual fund. It is all yours. You can pick the stocks, and the software will walk you from A to Z, telling you when to buy and sell, how much to buy and sell, including helping you to protect your capital through the signals that when the market rolls over will get you to cash and out of harm's way. It's very simple from here. It's just sign up, click the link down below. We'll get you in our system. As soon as you get in there, we will notify you of a live webinar to walk you through every step so you understand exactly how to use this product and how to manage your portfolios and protect your wealth. Sign up now, just click the link below.